We are live. We're live on two devices, so I'll be here and here. This is just a some form of two-factor authentication for me because I realized that whenever I go live, there's always like these complications with my network. These two live cameras that I have. But anyway, there's always like some complications with my network. So I'm always having issues with the playbacks. So why don't I go live here on Facebook and then go live here on YouTube? So hi Facebook, hi YouTube. I wanted to actually go live on Instagram, but I realized I don't know if they like did some setting. I've been trying to figure that out for the longest, but I couldn't. And we are here. And we're here. Um so yeah, hi everyone. So the introduction I'm gonna give is to Facebook people because this is the first time I'm coming on live. YouTube, they are not new to me. We've been going live for a while now. I couldn't for the most part of last week because I was very busy. I had a very intense schedule, so I couldn't even like get on to my phone. I usually do this, I try to do this around 6 p.m. I don't know if that's a good time. We may adjust the time later. I know I'm rambling, but I'm here to pass across a message. So bear with me. Right, so hopefully today the network is great. I'm looking here. Oh, let me just do something. The real G, my OG, the realest, my number one supporter is here, you guys. So this is going to be fun. So I'm just trying to, so that I'm not looking here and looking here because I have two cameras. My setup today is interesting, but yeah, God help us. Hi guys, how are you guys doing? Hi Uzoma, it's been how many days? It's been a long time, Sha, but it's good to have you here and I'm really excited that you're here. Your prompt, what's the word? Your ability to come here on time and just give me like a signal to keep going, is giving me ginger, to just continue what I'm doing. And thank you so much. The support means a lot to me. It really does mean a lot to me. So yeah, these downsides of living close to the road. Anyway, so I started something last week or so, where I said I was going to come on here to answer money related questions. So I called it or tagged it money FAQs, where you guys would be asking me money related questions. But I figured until you guys have the questions that you want to ask, we can just go through like the basics of money, understand the investing and whatnot, and then we'll proceed from there. You get to send me your own oh my auntie's watching. Hi. You can now I'm shy all of a sudden. You can now get to send in your own question after, or your questions after we have dealt with all of this. Okay, so money FAQs, right? We're going to start from the basics, understanding what investment is, and then we'll work our way. I know this is something like you guys already know what investment is. Facebook people, I am here and I'm here as well, so I have two cameras. I apologize that my glance is not focused, but yeah, like I was saying, you already know what investment is. Most of these things, they're just like gentle reminders to just put us in check when it comes to hi Abid, when it comes to investing. So yeah, what is investing? Why do we invest? What is investing? First of all, you know that it is putting your money away into assets with the expectation that after a period of time this money is going to yield more money, right? So the whole aim or the purpose of investing is to grow your money, right? So we have investing and then we have savings. What was like the subtle difference? When you talk about investing, you are putting aside money with the hopes that that money can be multiplied in the future, right? 1 year, 2 year, 3 year, 10 years down the line. But when you are saving, you are keeping your money safe, usually in a bank with little or no growth. It's not like you don't have like interest rates on that, on your savings, but compared to what you'd get when you invest. Hi, Abid, let's focus on the life, please. Thank you. Let's not get distracted. Okay, so compared to what you get investing your money, savings will give you, so if you were getting this much when you invest your money, savings will give you like 1/3 or 1/4 of that. Okay, and one thing to note as well is that when you are investing, it comes with like risk. I don't know how many people have read the book by Morgan Housel. It's a very interesting and beautiful book. You guys should read it, The Psychology of Money. You'd understand that investing comes with some form of, not some, it's like risk. You have to understand, just because they say investing comes with risk doesn't mean that all of it is like very risky. There are investments that you can do and go to bed and sleep and you are assured of your 10% or 15% or 12% or whatever the case is, amount that is promised, and also the capital is assured, right? But you should also understand that is like risk involved, as with everything in life that we're doing, right? There's risk involved in investing, but the higher the risk, the higher the potential returns that you stand to get. Okay. The people that are joining my live stream on Facebook, they are my people, and I'm seeing them. I'm just shy. Anyway, let's continue. YouTube guys are here, so let's continue. So why should you invest your money instead of just putting it in a bank? Why should you even think about investing in the first place? Why should you think about investing? Now, if you are in Nigeria, you know that inflation is a thing, because I think it's stable now, but at a point where it was at a all-time high. You go to the market and you buy something for 100 naira, you go back the next day. So yeah, that inflation, that's the reason why. That's one reason why. If you can't think of any other thing or any other reason why you should invest because you want to beat inflation. All right. So because inflation would reduce the value of your money that you have if you're just stacking your money, savings is great. I have a theology on savings, and I would highly recommend savings / investment, like hand in hand. So savings is really good, but if you are just saving and not investing, you are leaving a lot of money on the table. Okay, so what you save today may not be able to afford you the things so if you were saving now, the money that your savings can afford, or the things that your money can guys, the things that you can afford to buy with your savings, you may not be able to afford them in the next 5 years, 10 years time. I know that there was a point in I'm going to be using Nigeria a lot. We're in Nigeria, you guys, but there was a time where you could get a comfortable car for a million and two, $2,000. But now the price has skyrocketed. Cost of living has skyrocketed. So if you were saving then and were not investing, you may not be able to afford all of these things, because of the inflation and the higher cost of living that we're experiencing. All right. If you are following me in the comments, please drop a thumbs up. We may not be able to cover everything, but I just want to touch on the basics, and then from there we'll move, because we're doing this every day for the next, I don't know how long. We're just flowing. Okay. Hola, thank you so much. I'm really blessed to have you in my corner. You don't know Hi, you guys joining. You don't have blessed Uzoma. This is a shout. What's the word? Big shout out to you. So blessed to have you in my corner. Thank you. Okay, so we move. Why should you save? Okay, we've spoken about inflation, right? Also, still on inflation, when you invest, it helps you grow your money faster than inflation. Okay, and it will help you preserve your wealth. It depends on your goals. So I cannot just say go and put it in crypto, or go and put it in something. So you have to first of all do what I would call a risk assessment. How risk averse are you? So we have like a low risk, medium risk, and high risk. So are you high risk? Are you medium risk? Are you low risk? And even at that, if you've selected which spectrum you fall under, you still would have to answer some basic questions like, is this all of the money that I have, or this is just what I want to invest in? Do I have my emergency fund kept aside, apart from this money I want to invest? If all of that is settled and you just want to invest and you just want to look to start, and you are a low risk person, you can do mutual funds, right? It's steady, your capital is assured, your interest rate bounces here and there, but it's still a very sizable interest rate. If you want something more medium, you'll be thinking or be looking at bonds, government bonds, treasury bills, etc. Then if you are like very very high, you don't mind risking it, or you don't mind losing some part of your money or all of your money, but you still know that it's potential to get more than a certain or a fixed amount in the nearest future. You can do crypto, you can do stocks, all right? And then you then have to now go and select the stock that that first of all you've looked at their financials, or you've assessed them and you see that there's a trajectory of growth with that. You look at their year-to-date performance, you look at what they've been doing in the past, and you see that there's alignment, so you can now then invest in stocks. So stocks or cryptocurrency or alternate investments. I'm trying to think. I'm sure there are things that you can put money in, but the first thing that you need to do is first of all assess your risk tolerance, definitely. So how do you stay patient when investment take time to grow? So to answer that, right, I would say there's something that we say in investing and in the world of investing: time in the market beats time in the market. There are some people that you tell them, oh, crypto is about to be so amount the next day, or in the next month, or in a few months from now. Then they will go and quickly buy because of the news that they've heard, right? But the key is I think that's one of Warren Buffett's saying. The key is to stay in the market long enough, right? And not just time the market. So time in the market beats time in the market. And to answer your question about staying patient, that's where the other facets of investing comes in. Questions like your emergency fund, question like, is this the only money that you have? Because it would help you know how to stay away from it. When you invest, there's a lot of patience that has to go into investing. You are not flipping, you're not trading, you are investing for the long term, you're investing for the long run, right? So you're not expecting the returns to come in. I think the most that I've seen returns on investment coming is 6 months, 6 months to a year. So you have to have that discipline of patience. You have to have your emergency fund kept aside. You have to have your emergency fund kept aside. There's some background work that you need to do before you even start investing. I can do you a financial plan. I will do you a financial plan. We'll use your 500 500 thousand as a, you know, to build up your plan. But before we even go to building up your plan, I want to just understand your, what's it called, your, give me the word now, more like a discovery, your goals, your risk tolerance and all of that, your investing experience, etc. So we'll just work on that. Perhaps tomorrow I'll hit you up tomorrow. We'll do that tomorrow. Yeah, I'll take note of it, mental note. So anybody that's been watching, I've been answering questions from the comments. I hope you were able to get a thing or two. Okay, moving on. Let's move to the next. We're still on inflation. Okay, no, let's move that. We've answered that. Let's move that. Okay, so why, or what are the key, you're very welcome, what are the key principles to keep in mind before starting your investment journey in Nigeria or anywhere else? So this is the part that, you know, you get something from. Understanding your financial goals. Most people invest because they invest. Yes, investment is meant to not double, increase, grow your money, you know, keep your money safe from inflation, protect your wealth. But it's also important that you understand, why are you doing this? Have a long-term goal, have a short-term goal. Some people have goals that they're investing because they want to get married, because they want to start a business, because they want to build a house, buy whatever, do something. People have different goals, and this is the reason why I say personal finance is very unique, because not all of us can have the same goals, right? As much as I can talk to you guys about this, the only common denominator here is the fact that we're talking about money. It's the fact that we're talking about the currency. It's the fact that we're talking about the tool money, right? But apart from that, your goals are different. My goals are different. I may want to, excuse me, I may want to travel the world. That's my goal. That will be the reason why I'm investing. I may want to start a business, but for you, you want to do more philanthropic work, you know, with your own money. So you need more money to be able to do that. That's the reason why you would be investing. You want to invest because you want to give your children a soft life. So goals are different, right? And we've done short-term and medium-term goals. It's important to understand your short-term and your medium-term goals. Like you asked, how do you develop the patience to be able to how do you develop the patience for you to be able to get or stay patient in when you are investing, right? That's where your short-term goals come into play. So you need to understand, okay, what do I need, or what will I be needing money for? That would inform the kind of investments that you're doing, or the kind of investment that you're doing. If you have short-term goals and you want to invest, I would not advise that you invest in the stock market. Yes, the stock market can blow up overnight, but it is not advisable that you do stock market for a short-term goal. So understanding your short-term goals and your long-term goals would inform the kind of investments that you do. The next thing, know your risk tolerance. How much of a loss can you handle? If you say I want all my money, if I give you 100k, I want my 100k back. I don't care if you are not giving me the interest on top, but I want my 100. So you are risk averse. You are very, very low risk, little to no. You don't want anything to touch your money. You just, I want my money, and you know, that's on period. Then if you're like, okay, I don't mind like a slight moderation here and there, but let it not be the one that will give me a heart attack, you know, let it not be the kind of loss that will give me a heart attack. And then you are like a medium risk person. And then if you are the kind of person who, when you invest your money and you are comfortable with everything going away, like my 100k, everything disappear, you don't mind, then you are very, very high risk. But you know, with high risk also comes with high reward. The kind of risk that you take at that level the kind of reward that you get at that level, people who have done low risk and medium risk will not be expecting that, because they are not putting, or they are not going all in. Okay, so these are the things that you need to have in mind when you are investing. Okay, that's what we're talking about. So you need to start small. If you are new, don't just go into all of it. The key is to understand what it is that you're doing. That's why this is like a foundational. I'm starting off with the basics of investing. So you basically understand that yes, this has potential to grow my money. Yes, we want to do this for a long term, but let's understand what it is that we're doing. So we're going to start small and see like small changes, and then build over time, and also consistently invest. Okay. So diversification, there's also a thing as diversification is so important, right? It's more like not putting all of your eggs in one basket. So you are very excited about stocks, you are high risk, very excited about stocks, so without having other so that's something that you need to consider. You need to dive on the live stream. I don't know that right as your emergency savings. So diversification is to start investing with different solutions, fintech solutions that we have in Nigeria, and I think abroad as well. There are platforms that can allow you to start with as little as 5,000 naira. Yes, you heard me, 5,000 naira. Or let's just say 10k. Yes, with as little as 10,000 naira, you can start investing. You can start buying shares, you can start buying mutual funds, you can start, I think, buy some treasury bills. I'm not so sure, but yeah, you can start investing with as little as 10,000. So you don't need, the misconception that you need to have a lot of money before you start is not correct. Okay, so you can start with 10,000 naira. So it is important that you start early. Like I said, time in the market beats timing the market. Time in the market is in the how long, but also in the starting early of it, right? So you want to start early and then work your way from there. Even with small amounts, start on time and then work your way from there. So there are apps that you can use. We'll do apps recommendation later. Okay, so do I need to be rich to start investing? I think we've answered that. You don't need to have a lot of money to start investing. You can literally start investing with a very small amount. 10k. The name of the game is discipline and consistency. Not starting capital. Although people who have like a big money to invest in whatever investment or asset class, they tend to see results. But for you that is just starting out, you can start small and grow from there. Okay, how do I set my financial goals, and how do I set my financial goals that guide my investment strategy? I think this is just like the first one. Identify your long-term goals, your short-term goals. Short-term goals are usually 6 months to a year, and they would usually consist of like your okay, so I want to build my emergency fund, I want to have a birthday party, things like that. Okay, or I want to buy myself a beautiful dress. You can invest for that purpose. So think short-term goals. You can also identify your long-term goals, 3 years to 5 years. I would say typically to have like a 3-year plan. Your investment goals should be more than 3 years, but because a lot of things can happen, new policies are being introduced, things are happening in the economy. So I'd advise set a 3-year goal for your long-term plan. It's long-term, but have it reviewed every 6 months, but reviewed like totally review it in 3 years time again, or change it in 3 years time. Change your strategy. So if you're investing in stock, look at it. Was it working? Was it not working? What can I do differently? That sort of thing. So just have like a 3-year plan, simply because things change and whatnot. All right, I hope what I hope we're getting value from this. I need to drink water. I hope we're getting value from this. So let's move on. Okay, so now we're here. So what are the main investment options? That's what we're going to talk about. What are the things that people can invest in? What asset classes can people invest in? We've been mentioning stock. What is the stock self? So in a nutshell, there are things that you can invest in, and like I said earlier, these things are, so there's a category, right? So if you are low risk, there are categories of stocks, or not stocks, there are asset classes that you should be investing in, that you'll be comfortable investing in. You will not have sleepless nights when you invest in them. But bear in mind, low risk, right, they are not very sexy, the returns, but there's like a medium risk, which is a fair amount, or a fair balance of thank you, a fair balance of returns. And then there's like the high one, which is like high risk, high reward, basically. So we have stocks, which is like owning shares. We have stock. We have stocks. Interesting. We have stock, which is like owning shares of a company. Don't worry, we'll delve deeper into this. This is just for you to have like an introductory sense into what the investment options are. So I can do stocks. And what is stocks? You are investing in companies, like you're buying a bit of company. You've heard this thing before. We'll delve deeper into it, where we'll talk about only stocks, only bonds, only mutual funds, only ETFs, etc. But yeah, stocks, buying into company, you get that. Then we have bonds/treasury bills, which basically would mean the same thing. It's like you're giving your money to the government, or lending money to the government. That's for bonds. And then treasury bills is like you are lending money to the companies, right? So mutual funds, we have mutual funds / ETFs. Although ETFs are commonly, I wouldn't say commonly found, but ETFs are like, there are also stocks that are ETFs, or ETFs that are listed on the stock exchange, or listed, as part of stock. So mutual funds, ETF, basically the same thing, like a pool of money that you invest in, either in stocks or in different dates. So there's like a combination of what that mutual fund comprises of. Let me explain it properly. So like a mutual fund, we're pulling money. Remember the agile conversation that we had, right? But this time around, we're pulling money and giving it to somebody who's going to manage it professionally for us, right? And that money that they are pulling, the professional can either decide to invest that money that they've pulled from us into stocks, into bonds, or crypto, or whatever. It's like a composition of that whole money that they've taken. But that's not your problem, because they are managing it on your behalf, right? So there are different composition of mutual funds, so bear in mind. Now we have real estate. Real estate is buying property traditional way, where you go and scout for a building, or you go to a property manager, or you go to a real estate company where they take your money, give you a property, or help you manage the property and send money to your account. If you don't have money, it usually requires a large amount or a large sum of money. If you don't have that, you can also invest in REITs. REITs. REITs, real estate investment trusts. Yeah. So you can also invest in that. That's like fractional investments. It's basically like the way the stock works. You can buy, a fractional amount, and at a given period, they give you back rental income in form of like dividends. One second. So we have crypto, digital currencies, all the tech bros and tech sis in the house. Cryptos. We'll talk about that later. Maybe, I'm thinking. But yeah, we'll talk about that later. Then we have small businesses. You can also invest in small business. I think this will, in a way, be like a private equity type thing or a venture funding type thing. But yeah, we have small businesses you can invest in those. But that one too is like a very risky type of thing. Okay. Okay. Hmm. Okay, I think that's where we're going to stop today, so that we can focus on just pick like a class. Either we'll start with the lowest, the one with like that falls under the bandwidth of low risk. We'll start with that, and then we'll work our way to the high risk one. Yeah, we'll start with the high risk one. I think we're basically done. These are basic questions, and I think that we answered them, while we were talking about the rest. But let's just talk about this mistakes that people make, beginner investors make, and then we'll wrap it up from there. Actually, there are things. I'd really like us to finish this before we move into the next one. Okay, so mistakes that beginners make. If you're a beginner investor, some of the mistakes that you make: chasing get rich quick schemes. I need not emphasize on this one. This one is like, if you've not had experience on it, I don't know. You hear, if it's too good to be true, it probably is, true, or too good to be true. Anyway, not researching your investment properly. So when they tell you, oh, this investment comes with like a 12% interest rate, you don't know what are they doing to make their money, how are they making their money. You can't answer those simple basic questions. So that's a problem. So you panic sell during market dip. So you see, you go to the stock market and you're seeing red, and you say, oh, my money. Like I said, time in the market beats time in the market. Just put your money there and go and sleep, right? Don't panic sell, because not until you sell, if you haven't sold your stocks, you've not lost money, even though the stock market is going back, because it's going to rebound, it's going to repair itself. And yeah, another mistake is failing to diversify. Diversification is very important. All right, diversification is very, 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 very important. Now let's look at how do you review or adjust your investment. Every 3 to 6 months for beginners, you rebalance your portfolio yearly or when your goals change. So because you are investing long term or even short term, it does not mean that you have there's a thing as going to review your portfolio. You know how when we talk about budgeting, right, how you go over the month's spend and look at the things that you spend money on, the things that you could have saved money on that you didn't save. It's the same thing that you're doing to your finances. Rich people who can afford to have people look through their investment for them, do that. But if you cannot afford to pay somebody to look at your investment for, like, manage your portfolio, that is, you have to do it yourself. You have to go over your portfolio every 3 to 6 months, and see how your portfolio is performing. All right. What else are we missing? Okay. Now there's this one. I think this is the last one. So how do I? What is going on? What is? Anyway, so how do I prepare for market volatility, inflation, or economic uncertainty in Nigeria? these words are not new. Market volatility, or maybe they are, but they are not new to me. They are like a constant. If you open the business news or economic news, you are seeing something related to inflation, something related to economic uncertainty, something related to market volatility. So these are, is not, they are not new words, but how do you navigate that part? Sometimes when you see the news that, oh, this is happening in so and so place, you're sort of scared. Oh, my money, what happens to my money? What do I do with my money? So you diversify. All right, you diversify across asset classes and currencies. You invest consistently and avoid panic selling. Like I said, just because the market is turning red, don't go and sell your money. You don't lose money until you sold. So don't. Maintain an emergency fund. This is so important, and this is where either your savings or your mutual funds would benefit you greatly. So have like an emergency fund. I love the energy. Focus on long-term goals rather than short-term swings. So focus on long-term goals rather than short-term swings. So when you see something is happening in the news, your goal is your goal. Don't allow that to except, of course, I mean, it's good that you're following the news so that you are aware of what is happening. But if you know that it's not directly going to impact your investments, don't panic sell, or don't be swayed by it. Okay, we have come to the end of today's episode, and I'm really excited. Did I call it an episode? Well, yeah, we've come to today's episode, and I'm calling it an episode of Money FAQs. Tomorrow we'll be delving into investments, like in depth, and I'll share the types of investment that low risk tolerant people can invest in. I'll share that, and I would also be sharing in depth the types and where you can find them, like the apps you can use. I'll give you options, but the key is for you to go and do like a personal research by yourself. If I tell you use this app, don't say because this is not the popular phrase, this is not financial advice. This is for educational purposes only. This is not financial advice. If you want financial advice, come and meet me directly so that I understand your situation and recommend something tailored to specific needs. Okay, this is just for educational purposes only, and it's not financial advice. Yeah, so we'll talk about low risk investments tomorrow, the types that you can do, where to find it, how to find it, how to access it, why they are low risk. We'll look at everything, having conversations around that. It has been a very shout out to Uzoma. God, like you stayed till the end of the live stream. I am so happy. I have some people on Facebook as well. Shout out to you guys. And thank you so much for joining us. We'll go again by the grace of God, 6 p.m. tomorrow. Please set your timers, turn on your notification, just do something to remind yourself. I will be doing something to remind myself to be here by 6. So yeah, thank you for listening, watching, and I will catch you guys on my next one. Bye now.